Hello everyone, I'm Devon Coombs, and today I'm going to be going over problem 2 of CSUN's Gateway Lab exam for financial accounting. So the question is, which accounting assumption assumes that an enterprise will continue in operations long enough to carry out its existing objectives and commitments? A, the monetary unit assumption, B, the economic entity assumption, C, the time period assumption, D, the going concern assumption, or E, none of the options listed. So let's start with the monetary unit assumption. So the monetary unit assumption is the assumption that currency, and in the United States that's the US dollar, is expected to retain its value over time. So a dollar today is going to roughly equal what a dollar is in 10 years from now. This allows us to report accounting information at the currency we're using. So in the United States, we report all accounting information in US dollars. Items that can't be expressed in dollars are not put in financial statements. So on financial statements, you don't see units. You won't see in inventory 100 units of inventory. You'll see the dollar value of the inventory. And this helps with consistency as well as helps with interpretation of the financial statements. Now let's move on to the economic entity assumption. That's the assumption that the activities of the entity are separate from the activities of the owner. That makes a lot of sense because in the United States, a corporation is its own person. And so therefore, a corporation has to have its own books, as well as a person running a corporation has to have their own books as well. So these are kept separate, and that allows us to make financial statements for economic entities separate from their owners. The time period assumption is that time can be divided into distinct and consecutive periods. That allows us to do monthly, quarterly, and annual reports. This also allows accounting data to be allocated to these specific periods. Lastly, the going concern assumption is that if we're reporting on an organization, it will carry on long enough to carry out its goals and objectives. So if an organization might liquidate or go bankrupt within a year, that would express a going concern issue because that company might go bankrupt or that company might not exist to meet its goals and objectives. So with all that in mind, let's look at the question again. The question was, which accounting assumption assumes that an enterprise will continue in operation long enough to carry out its existing objectives and commitments? The monetary unit assumption doesn't make sense for this, as that's just dealing with dollars and cents and how we report the information on financial statements. The economic entity assumption has to do with managers and owners being separate from their entities, so that doesn't make sense with this question. The time period assumption has to do with making financial statements within specific periods, like quarters and years, so that doesn't make sense. But the going concern assumption really makes sense here because that has to do with a company existing long enough to carry out its objectives and commitments. So D is going to be your answer for this question. Feel free to post any questions you have about this or misunderstandings in the little boxes below, and I look forward to seeing you for question 3. I hope this video helped you out. Bye.